everyone. Welcome back to the RationalInvestor.com's Daily Brief. Hello, hello, party, party, woohoo. Happy, where are we here? Happy day one of the two-day Federal Open Market Committee Bankster FOMC frivolity event. Dun, dun, dun. It is Tuesday, starting right on time. Love that. Chris is driving this bus like a boss. Totally cool to see. Today is Tuesday. Tuesdays are on our, I guess, after party show. We will check in with Chief Bottle Washer, PHP developer, MySQL genius. What else can we throw at him? JavaScript? Do you do much JavaScript, Stuart? I don't know. Anyway.
Yeah, it's necessary evil.
Anyway, we've got Stuart on the call here today. Hello, Stuart. How are you
Hi
today?
all. Hi.
And it should be Stuart without the T. Stuart. Ever since I've been back from Portugal, I think I literally say that about 4 or 5 times a day in my brain. But hey, what the heck? I got to get this right. So, in fact, Danielle DiMartino Booth, right, Chris? That's how it goes, right? And actually, people were posting pictures of her in the lounge. She's turning into quite a celebrity now, eh? I was quite surprised when I woke up this morning. Mind you, I don't know whether we can show it here or not. But people, I don't know. It just does that. Anyway, people were passing around pictures of Miss Booth, but I can't
Oh,
see
you missed
it.
it. It was that. It was down a little bit. It
Is
said
it?
cool
It's one of
under.
these.
Yeah, a little bit
Actually, I
lower.
couldn't believe. Look at that W coming in on Cripple. What the hell's going on here? You know, almost like this is a bull market or something. What the hell? Anyway, yeah, there she is. Look at her. What a hottie. Woo! Although I think somebody said that this picture was from a few years ago, but what the hell? What does the Fed's first lady think? Hike or no hike? Anyway, full steam ahead. I suppose that's, and everybody's been talking about that. That's, in fact, there was one gentleman, I'll show you him. He's not quite as sexy as Miss Booth, but, or Mrs. Booth, I suppose. I think better acknowledge her husband or he's not going to be very happy. But I was watching, and I think I was telling you guys on these public videos, I was watching the Bloomberg guy who always wears the bow tie, and he's so, what's the professor of economics saying? And he was like, the only thing I'm waiting for is what does the chairman of the Federal Reserve Board say? So I think a few people around the world are going to be watching pretty darn closely for this event here today and tomorrow. And really, you know, we have a rule around TRI, and if you're watching this on the YouTube channel, just sort of tuning in, hey, this crazy guy. I love some of the comments and the feedback from you guys, trying to make a positive difference in this world. I was I was interacting with some people making comments and stuff like that last night. So thank you very much for your feedback. I appreciate it. Any way we can make this feed better, I think, is a good idea. So I guess the point here is what I usually do is I just blab for about a half hour or so here, and you never know. And you know, in the after parties and the Sunday shows and stuff, geez, I can go on for hours. And you just never know when stuff's going to spill out of my mouth that you probably should write down. I'll usually give you a little heads up when I think of something, but it's not a bad idea to have your journals handy. What crazy nugget of wisdom did the Beamish drop on us today? But anyway, couple minutes past the top of the hour. We like to make this show about a half hour long or so. And like we said, we're going to hop on over and hang out with TRI's CTO. And sort of get an update on how the Magic Machine is working. Magic Machine actually spat out a sell signal on crypto overnight. So I think I was warning you guys yesterday that the algo was sitting very, very toppy. And sure enough, and unfortunately, I don't know whether you guys in the public are aware, But I was really under the weather yesterday. So after all the videos and most of the day trading and stuff was done, I actually went back to bed. I woke up with a start last night at about 10 o'clock or so. Of course, because the clocks changed, everyth's sort of out of whack. But I woke up to a big fat sell signal that the system has generated. So clearly, subconsciously, Sjord was reaching out to me going, oh boy, better do something, Beamish. Unfortunately, in my sort of sickened haze, and this is why algos often do way better at this kind of trading than humans, because I was sort of slow off the gun, the signal came in. And I think I can just show you. Actually, interesting. I'm working some shorts here this morning. So we actually had a pretty nasty, or not nasty, a pretty bullish econ come out. Actually, you know what? I should move my stop to trailing. So I think I'm going to do that now. Where are we here? Let's, oh, now how the hell do I move my stop on this darn thing? Third most recent high. I will take a small profit on this if we get filled. 412.50, we'll say. So, actually, this is kind of a fun application of this trading bot setup that I think I told you about. Chris even did up a nice little short of my trying to explain a long bot setup on Bitcoin. Here's a short one that happens to be working away. So the entry should come in at this 25 level. You can see the little trade metric is over top of it. But geez, I got about 4 or 5 things going through my brain here all at once. So this is the danger about having trades on while you do these videos and stuff like that, because I don't want to go in and screw this up. This was a pretty good entry. I mean, I've got multiple lower highs. I've got really nice structure. I've got a nice simple A, B, C, D pattern, and it's suggesting the market wants to head down into this we'll call it 39.95. It's probably just flirting with the big fat round number 4,000. Hey, there's a little nugget you want to throw into your journals. Markets love to oscillate around big fat round numbers. So my hunch is probably by the time we're done this video, we'll probably head back down here, but we'll see what happens. This bot setup has rules built into it, and if 50% of the anticipated move happens, which you can see I've already done, I get permission to move my stop to scratch. I actually front run this bot level a little bit. You can see the bot level itself is 40.15, and I'm short here from 40.15.75. Woohoo! What a move! But that's because I took this M here, and so I moved my stop to scratch. Shouldn't get hurt if this trade doesn't work. But we also had move stop to trailing level here at 66, or 2/3 of the anticipated move. And now, really, I should use the TRI's patented 3 high-low method to trail stops, which would have me have my stop just above these levels right now. So we'll see how it goes. If I get stopped out at scratch on this, it's not really that big of a deal. But I wouldn't mind if I could. Maybe while Sjord's talking, I'll go and do that in a bit. So why is the market coming off here like this? I thought we were supposed to be in some sort of crazy big bull market. What's going on here? If anything, what I do see is I see a lot of back and forth, very, very herky-jerky price action. We came up into a kind of a pivoty high here. I like to identify these 4-hour pivots as potential trade locations. Did have a little foggy-boggy that was floating around up top here. And I suppose you could make the argument off of this high that we're coming up into reload short zones off of here. And then off of the bigger range, we're into Collins, I guess in this case, dump chaser zone. So we'll see how this goes. I'm constantly trading different setups. In fact, actually, I'm sort of working with a setup that I was, there's, YouTubers and stuff are, hey, try my setup. It's 80% accurate. And actually, it produced a pretty good trade here this morning, I'll have to say. Spat out a nice 2.5 to 1 risk reward. So anyway, that's sort of the day. But I think really what's going on here is the market would like to rally, but if it rallies, that means the Fed's going to keep raising interest rates. And, you know, if the econs come in relatively, not really that big of a deal, then I don't think the Fed's going to be in a huge hurry to do anything. Of course, we got all the banking issues right now. And, you know, as I showed you with Miss Booth, I think really the question ultimately is are these banking runs and stuff like that, are they systemic? Is this a broader economy issue? Or is this just a few institutions just caught with their pants down? They didn't really manage their risk portfolios correctly, and you know, interest rates go up. That means bond prices go down. If you're using the bonds as collateral, well, you're going to get yourself caught. I'm wondering whether that's just, and the question is this broader? Is it systemic? Is it you know, is it problematic across the entire economy? You know, I would be leaning towards maybe the Fed just cools down, slows down a little bit. But then we get econs come out, and I told you that in Canada, we had housing starts number come out last week, and it was just like absolutely rip roaring, just huge number. I am interested, you know, the econs that came out today, Canada shows inflation rate basically coming in line expectations, but coming off quite a bit. This is the headline number. But interestingly enough, if you look at the core number, the actual, you know, these banksters, the Fedsters, right? They like to really follow these core numbers. And I thought it was interesting that the core number actually came in a little bit higher than expectations. But, you know, versus the previous number, it's going to show that it's still falling. So I suppose from this regard, the Canadians are going to feel as though they're justified in keeping rates stable. But notice things like this, like the core inflation rate month over month. The market was looking for 0.2. The previous number was 0.3, and it came in at 0.5. Ooh, boy, that's not good. So I don't know whether we've really gotten in front of this. So fast forward, you know, Canada's kind of like a 1/10 account size trade, you know, kind of like what I say for people who are practicing trade setups, how you should follow that sort of building up to trading your full account. You know, maybe trade Canada first for like 20, 30 trades before you go to the States. But in essence, Canadian economy should be about like 1/10 the size of the US and follow along the same lines. So we look down at the US market and look at this number that just came out, I guess, about 2 hours ago. And I think this is what started the selling and people went, oh crap, look at this number. So the market was looking for 0.5%. Previous was down 0.7%. And in essence, this is exactly what Mr. Powell has been talking about, trying to get, you know, keep in mind that the BlackRock Capitals and stuff, they're buying up all the houses. So, you know, they want us to basically be renters for them for the rest of our lives. You know, the problem here is, how does the Fed slow down BlackRock Capital? And I mean, keep in mind, he wants more profits, right? When he was long all those Tesla shares and loaded up, of course, everything that you heard out of our society was about global warming and we're all going to die and we better get these politicians to do something, blah, 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 blah. As soon as he dumps all his Tesla stock, or not all of it, but a big chunk of it, all of a sudden now, after that, he goes, well, we're going to let the public comment on ESG and all that. And what's ended up happening? It's basically just sort of fallen right off the table. I mean, we used to talk about Greta every single day. You don't really talk about Greta too much anymore. So, wow, what a number. Boom. And I don't see how the Fed can stop in the face of that. Like when you pull up the data set, it's just like, okay, Mr. Powell is slowing the economy down. Things are looking good. And then, okay, you know, maybe, oh, hey, we got a bit of a banking crisis. Maybe that'll slow things down. Mortgage rates calming down. And kaboom! The market just explodes higher. Existing home sales down in the States just going crazy here. So how could the Fed stop raising interest rates in the face of that? And that's, I think, primarily the reason why this thing's coming off here. 3 high-low method. What the hell? I think we probably should just close this thing out, Let's take it off. I don't want to be distracted, so we just kill that. Hey, it's a cute little profit. What the hell? If anything, what we're probably going to see, we should see a bit of a rally out of the U.S. market with that strong Econ number. And, interesting enough, look how the Canadian dollar's coming off in a hurry here. So I'm not quite sure what the reaction out of that. That might be that, those internal inflation numbers are a little bit concerning out of the Canadian data. And of course, they didn't raise rates with that home sales number down in the States. Can the Fed not raise rates now? I think they can't. They've got to. And so that's just going to increase the spread between Canadian and U.S. rates. So what a big surprise. Canadian dollar's coming off here. So that's interesting. Also interesting, too, see how the Swiss franc is acting relative to gold. Gold's had a big jump up here recently. If anything, what I'm kind of seeing in the market, which is getting a little bit concerning, is the crude oil market, of course, has been just in free fall of late. And of course, we did like bigger foggy boggy, like if we look at like the higher time frame charts. Yeah, I think I've put out lots of tweets and stuff about all this recently. I mean, huge bearish patterns suggesting that crude's got to come down quite a ways. I think still quite a bit further. But at the same time, too, market never moves in a straight line. I noticed that we did a little bit of, actually, that's sort of explaining the bot setup a little bit in that short. I saw people going, yeah, well, the reason why the market doesn't move in a straight line is this, Brian. Well, the reason is that. Whatever, blah, blah, blah. Point here is market doesn't move in a straight line. And we had basically a pretty much straight line move here over the past week or two. Could crude maybe have a little bit of backfilling here? I do think that a lot of the price action that you saw over the past week or so really didn't have anything to do with the banking crisis, didn't have anything to do with Swiss banks, because I don't know whether you noticed, if you actually look at some of these econ rags, the headline is, oh, well, the world stock markets are rallying now. Everything's perfectly fine. So it's a little bit of, making up the story as we go. I think what happened here was that the market dumped into the options expiry. I've talked to you guys lots about how last Friday was a huge derivatives expiry event. So they kind of had to dump it, or if they didn't, we probably would have seen a lot of, things like call options and stuff expire in the money, and Wall Street sort of get caught. So, following that event, it's almost like, we've got the Fed, of course, tomorrow afternoon. There's a little bit of a vacuum in the market. And so as a result, the headlines are global stocks advance, U.S. and European equities rose, as worries over the health of the global banking system continue to abate. Well, I don't know whether they really do or not, but I think, the talking heads always have to come up with some sort of narrative as to why things are happening. I would just simply say it was a function of options expiry last week was a huge driver for prices. And then we have this sort of few day window. It's kind of kind of like a vacuum, I think is the best way to describe it. And then, like I said, showed those existing home sales, just staggering number. And everybody's kind of like, I don't know now. Oh boy. But I've told you guys before, this is a little bit concerning. You don't want to see the market rally into a Fed meeting, right? Write that down. That's not a good sign. We would prefer, if anything, the market be weak into the Fed meeting, which is interesting why we got these sell signals in crypto here. If anything, if you're a crypto bull, you would prefer that they take the fluff out of the market, take the premium out of the market, and then after the Fed announcement, we put in some sort of bottom and then just continue our way higher. So that is interesting how we did get that flip there in crypto. So anyway, there's your backdrop as to the broader market. As I said, I think the housing start numbers, I think that caught people a little bit by surprise. Interesting, we're probably going to M out here and start cranking our way back down lower again. We'll see what happens. Doesn't really matter. Point here is that I don't like the fact that they're rallying the market into that Fed. And if anything, also too, the fact that the gold market is coming off, there's another thing. If the gold market was rallying into the Fed, then I would be like, well, that's probably it for the gold rally. And it would be sort of like buy the rumor, sell the news. But you notice that they're knocking the gold market down here into the Fed. So I get the impression that especially seeing that retail sales number. Well, actually, the retail sales number was pretty good. It wasn't really overtly crazy, oh my God, run for the hills, because I don't think the consumers are the problem here. I think the problem is the BlackRock Capital people, and they're just sort of runaway spending in the housing industry, and they just can't get this housing inflation under control. As I said, we actually have been following the retail sales. I like to follow the Johnson Red Book. This is a pretty good sort of internal indicator of retail sales. And this has actually come down, back down to the levels that I think the Fed would be happy with. If retail sales just sat in here, this is what was supposed to, they always say that you want to see, a nice 2, 3, 4% maybe sales growth. Is the consumer actually the one driving the bus in our consumer-based economy? If that is the case, then 2, 3%, that's sort of ideal. Then, of course, through the sickness, all hell broke loose. It absolutely collapsed. And ironically enough, through this crisis here, Jerry, he just said, hey, I just want the market to come back to pre-sickness levels. So he got that. Then the socialists, right around the world, substitute drama teachers, Sjord's buddy over there in the Netherlands telling young girls who'd like to buy houses, too bad, no way you're going to buy a house. BlackRock Capital wants to own all the houses. May go find some rich boyfriend or something to solve your problems. Because there's no way in hell, little lady, you're going to ever be able to afford to buy a house. And then, boom! Hit the bricks, buddy. You're out of here. Actually, I was so happy last report from Sjord how that guy just got totally humiliated. That was beautiful. Anyway, long story short, we get up into this insane socialism, insane, just ridiculous money printing, government deficits out the butt. You can't even count how high. And old timers in the market that are highly respected, guys like Druckenmiller, come out and go, what are you doing? I mean, you're breaking our economy. What the hell are you doing? And sure enough, Powell heard Mr. Druckenmiller's message, and I'm sure Mr. Druckenmiller, he's got a few friends around, and they were like, what the fuck are you doing, you idiots? And they got some religion. So through raising short-term interest rates, they were able to control the consumer, and I think they've got exactly what they wanted out of the consumer. The only problem is we got to deal with these damn, BlackRock Capitals and stuff that aren't consumers. They're like, it's almost like, you could argue this is very much like communist Russia. How do you slow down a runaway train? You could argue that these big, they're kind of oligopoly. They're really more like monopolies, really. Just a few institutions dominating our whole society. And as I said, that's not the kind of data the Fed wants to see to see that inflation is under control. So do we have to go through a big whack of interest rate increases to try and get this market under control? That might actually absolutely destroy the consumer. That's my hunch of what's going to have to happen here, which of course isn't the best backdrop, but oh well. Welcome to the 21st century. I suppose, what time is it? We got about maybe 5-10 minutes left. As I said, crypto-wise, did get my sell signal. I did hop in on the long side on the breadth buy signal on Bitcoin. So last night I had to feverishly hop off. I think I've been talking to you guys, on weekend shows and stuff like that. This was an awfully big move, right? From 19 and change all the way up to 28 and change. I mean, gee whiz, that's like almost a 50% move. That's kind of crazy. So I don't know whether this is the top or not, but algos were kind of like, you probably ought to hop off here, Brian. So I did. little bit of a sloppy exit. I will concede that. I'm not half as good as the robots trading. I don't know whether, this was a lower time frame bullish bot setup that we were talking about. How would you get in on this move later on? I get the impression actually it probably would be off on the sidelines now too. I mean, we're getting higher highs and lower lows, so this is kind of megaphony now. It's very choppy action. But having said that, if the stock market's relatively happy here and it's still booming higher, and of course, we have to understand what the message is. If the market's rallying into the Fed announcement, like I said earlier, that's not a good sign for the other side of this Fed event. So could we have Bitcoin pop up here a little bit more overnight into tomorrow afternoon sort of frivolity? Yeah, I could see that. Wouldn't surprise me, but just for whatever it's worth, I guess this is the chart where I have it noted that on this double top breakdown here, it's not really the cleanest double top, but nonetheless, the algos flipped over last night, so I hopped off the long. We'll see how that goes. I suppose one could argue with this overnight low, probably if you do actually see this thing M out here and head down through there, that's that daily chart scenario that I was talking to you guys about on the weekend. I didn't, just no real clear messaging of how this was going to act into this FOMC event. Not weird. I guess I took that off. But we have oh yeah, there it is, FUMC. We have this FUMC coming up here. I don't know how this is going to act. My hunch is they're probably going to wash the top here. Usually the market craps out after. The rule is don't trust the Fed until 1 full hour, or don't trust the market until 1 full hour following the Fed announcement. So could we see over the next 24 hours some effery up top here? I think so. Is this actually an outright setup sort of sell signal here? Not really. I really would like to see some structure here to actually tell us that yes, indeed, we have topped out. Maybe it's like an outside downside reversal. Maybe it is an M. Maybe it's just an inside bar failure. I don't know. But I'd like to see something. And right now we just don't have anything. The only thing we have is the algo has flipped over bearish. So as a result, and that just happens to be one particular trading plan that I trade. Like I said, I've got a whole bunch of different trading plans going here. Practicing new setups, trading my old time-tested setups. It's just a trader's life. And of course, at the same time too, I have been talking to people. In fact, we'll have our options club meeting tonight. So by all means, this is probably a conversation that we'll have in the group tonight. I think there's some really interesting call spread trades developing within some of these crypto stocks. Also, too, I thought it was really interesting. It's a little bit scary, and it might be sort of one of the big drivers why the Fed continues to raise interest rates. But I noticed, for instance, things like the NASDAQ actually did confirm an outside-upside key reversal. That's a pretty damn bullish bar. And if anything, this is a good conversation about Mr. What the Kramer guy saying, oh, don't short the NASDAQ or you might get your head handed to you. So, I think this is, of course, predicated on how the Fed acts. You might find that this is a bit of a head fake and we start melting down. I think also, too, it's tied in with, this is actually a fantastic application of our site. And why I think that this site is so valuable now. Because if we go into our screeners, right, we actually get a nice little list. You can see over the weekend, Amazon.com, FedEx, Lam Research, what happens to be a really big semiconductor parts player. And there's your QQQs. Look at that, 13, 13, 13, lucky 13. So, when you see that many key reversals all coming in, weekly charts right across the board, a transportation stock, we always say transports confirm what we see in the economy. If they don't, then that's actually a huge warning sign. So we got transports, we got semiconductors. I think I told you guys recently, but probably not in the free video, but in the in the after party yesterday. You know, the semiconductors historically have been, they actually call it the ultimate leading indicator in the society. So if semiconductor stocks are spitting out outside upside key reversals, it shouldn't surprise us that things like Amazon and then the NASDAQ 100 trust unit are spitting out outside upside reversals. So you can see the market's right on it wants to rally here. It really does. The only question is does the Fed see this and the Fed go, hey, I'm trying to calm you people down. So you're not calming down. You're spitting out outside upside key reversals. So I'm going to go and raise 50 basis points to try and get you people to pay attention. If anything, I think you probably just watch this guy. If you see that this market closes above this outside upside key reversal bar tomorrow through that 30 SMA, I think basically like Mr. Kramer said, you could you can see this is a bull ABCD. Prices are probably going to ratchet right back up into this 200 SMA. You might see a pretty substantial rally. So anyway, never a dull moment. I suppose, we're just going to have to see what happens. I would say, though, that I'm a little bit leery about taking a trade like this ahead of the Fed tomorrow. If anything, what I would prefer is let's come back maybe Thursday or no. I guess Thursday, because Julian's going to do his baby powder report tomorrow, Wednesday, and I'll be back Thursday. So if anything, this will be a really interesting. I'll check in with you guys in the public stream, and we'll review how the chips fell for this daily brief Thursday morning. Should be very interesting to compare notes versus what we're seeing here today. So there you go. Big, very strong econs coming out of the States here today. Maybe a little bit too strong. About a particular part of the economy that Mr. Powell has specifically said we need to somehow get control of this and get in front of the inflation, and it doesn't look like he has. The consumer is feeling the pain that he wants us all to feel. We can see that in the retail sales number. The goods prices, I showed you the crude oil. It was come off dramatically. It's done what Mr. Powell has wanted. The issue all comes down to this whole mortgage-backed securities industry and the way that they have securitized housing, which they were never supposed to do. That was a big, big mistake. And now, unfortunately, we're living in the aftermath of that very, very big mistake.
I think we can talk a little bit more about that in the after party, though, I'm sure.
If anything, yeah, that's probably a perfect dovetail. We can carry on this conversation as well, too. We have our CTO talking to the site here on Tuesdays in the after party, so that'll be worth tuning into. As you can see, the team has, although I'm not quite sure where it is. Well, I do know he has it in Rocket Chat. We are moving to Discord, so you better get your act together. I thought I saw this on the page. There we are. TRI's community chat is now on Discord, so we should get a report. So anybody that's actually a TRI site member and you're watching the free video, probably a good idea to tune into Seward's commentary here today to talk a little bit about how site development and what our next steps are. So, okay, I think I'm going to leave the rant at that for today. Of course, FOMC tomorrow afternoon. We've got Julian's report tomorrow morning. I'll try and throw up just an open. Maybe we could even do it on Discord. I'm not sure. But an open hangout for us to chat as we go through the whole FOMC event. That's always fun. Maybe consider joining our after party here today. We do have a 30-day trial. So you can maybe get to know the internals of the site a little bit and, listen to how site development's going. As well, too. Chris was pointing out that we're up above 7,500 now on the YouTube channel. So everybody, hit the like button, subscribe, ring Colleen's bell to be notified when these videos start. We're pretty good at being punctual, so every morning, Monday to Friday, around 9 a.m. Pacific time, noon Eastern time, I guess about 4 o'clock or so, 5 o'clock in the evening European time. We've got this daily summary report for you, so make sure to hit the notifications, and then that way this can be sort of your daily. Actually, I even heard somebody the other day say, Brian, I don't tune into the mainstream media, certainly don't watch those talking heads. I actually get my news and my econs from you. I was like, oh, okay, no pressure, no pressure. So obviously we're resonating. So great to see the increase in YouTube participation and interest and subscriptions and stuff like that. Let's keep that going. Join the conversation. Put your likes and comments down below, and let's all head on over to the TRI after party now and have a nice chat with Stuart. Other than that, have yourselves a great day. PMA for the win. Remember what your number one job is. All the best. Everybody says bye for now.